Hey, what's up out there? It's Dave Duford here at Final Expense Agent Mentor, where I help agents like you succeed in the final expense business. And I want to thank you so much for joining me on today's ad hoc live stream. I am recovering from a almost 2-week-old flu here. I had a chronic, I hope it's not chronic, but an acute bronchitis. And so I've got this little itch in my lung. So it's basically where I had this infection, I guess. So bear with me if I have to cough a little bit. I got my Dixie cup of water here, and hopefully that'll help me get through things here. So in today's training, I'm going to be specifically talking about retention strategies as it relates to those of you who sell final expense. This was a request made by one of the commenters on one of my videos, and I thought it'd be a good idea to go ahead and detail kind of what my recommendation overall is for retention strategies as it relates to keeping final expense business on the books. Because it's no secret that probably the most difficult part of the final expense business is keeping what you sell. The old adage is true. It's not what you make in this business, it's what you keep. And you have to learn how to implement strategies effectively to keep what you sell on the books. So that's what we're going to talk about today. Specifically, we're going to talk about why retention starts at the client acquisition of the acquisition of the client, and then we're going to go into what specifically you can do if you see a cancellation notice from a client or if you see a missed payment notice from a client. So the big thing I want to bring to you guys here is that if there's one element of training that you actually implement, this would be one of them. Effective retention strategies is not difficult to put into place. It just requires an adjustment in how you sell. It requires some basic follow-up techniques, but it can mean the difference between a 75% first-year persistency and an 85% first-year persistency or better. So it's really important because a lot of the places that recruit you that will say that final expense is the greatest thing ever, they'll never tell you what I'm about to tell you as it relates to the quality of business that's is a challenge in this business. And you'll never hear, you'll see what they place, you'll see what business is submitted, but anybody who's been in the business for a year or longer knows it's what's issued that matters. So take everything they say with a grain of salt, because many times the way that these agencies teach you how to sell final expense doesn't take into consideration keeping this business on the books. And there's been many stories I've heard of top producers, literally top producers at very big organizations that specifically sell final expense, that have the worst persistency numbers, that have chargeback problems. And that leads into why you would want retention strategies. I think of you first as the final expense agent. You have to sustain yourself in this business, in this career, because there's going to be a lot of people that need your help that really only you can help. And if you blow yourself out of this business because you don't take care in writing quality business, you're not going to be around to help all these people that only you could have helped. So the big thing here is, the biggest thing in the final expense business is controlling this quality of business so you can keep your chargeback ratio under control. Many times agents get out of this business because they see so many lapses that occur, so many chargeback issues that occur, and it's because in many cases the quality of business that was written was poor to begin with. So let's go ahead and get started here with the different topics. So the first point I wanted to mention here is that retention starts at acquisition. Okay, so what I mean by that in a more broad sense, it's how you sell your client and on what strategies that you use in the sales call that makes the biggest impact of whether that client's going to keep what you sell them or eventually dump it down the road. And so what are those details that you need to be concerned with? So I think the first thing is proper selling. Okay, I believe with final expense you have to sell the need. You don't need to grease the greed glands too much in selling final expense, because many of these people we sell are convincible. You're a salesman after all, and many times people will bite off more than they can chew, and they'll find a way to get rid of it because they only make so much a month. I was talking to a person the other day who only makes $700 and $30 a month. And you guys see people like that just like me all the time. There's no way that this person should spend $100 a month on burial insurance. We know that she's got other expenses that she's got to manage. So why would we take that much money? Even if it clears a year, it's no good to the client because eventually they're going to lapse it. It's just a statistic probability that is pretty high. I'd much rather sell this person something they can easily afford, 20, 30, 40 bucks a month, than this much larger amount that's just unbelievable. I've seen it before, actually, and where people have sold stuff and they never should have done it. So continuing on here, sorry for the cough. What do you need to do? So first you got to sell affordability. You need to sell something to the client that's easily affordable. That's the only policy that you should do and you should sell in the final expense business. You shouldn't be pushing higher premiums. You should be selling the need. You shouldn't have to cajole or hard close these people, because the more you start doing this stuff, the more problems are going to manifest. And then on some level, I also believe that the more you tell, the less you sell is actually a good thing. And here's what I mean. You don't want to leave a stone unturned when you close out a final expense deal. You want to make sure they understand every single detail. They understand what's required of them. They understand all the details involved so that there's no surprises that are going to forthcome from after you leave and something happens they didn't expect. So you need to make sure that they're totally bought in 100% on every level. I can think of certain sales calls I've done where maybe I didn't quite explain things as clearly as I should have, and I left with that feeling of, gosh, I hope they keep it. They didn't seem like they understood it, and they end up lapsing it or canceling it or something happens. But I knew on an instinct level that right at that moment there was something wrong, and I should have attacked it, clarified it, and made sure they were all on board. Then, hoping for the best, So make sure that they're totally bought in. They totally understand what it is that you've sold them. Make sure that they're totally on board. And then the one thing I'll add to this too is you got to sell competitive premiums. This is a big function of success in this business. Now, some people don't have to, and they have okay persistency, but I would say the general agent, the basic agent, they need to focus on selling top 20%, top 15% of the most competitive premiums that are available, because the more you get away from something that's competitive, all it takes is for some other guy to come in there and undercut you by $10, and the client many times they'll make the replacement. And it's tough to accept that, but it really is the case. These people live on a fixed income, and that's all they think and breathe. And we just don't create a very deep connection or relationship with our prospects the vast majority of the time, just because this is a one-call closed business. So you got to be very careful and mindful. Sell competitive premiums. Another thing you want to do or consider implementing is using carriers with a Social Security billing option. This is where we draft the money on when the deposit hits the bank account versus on a numerical date, which may or may not be the deposit date. The more time passes between the deposit date and your draft, the higher instances of lapse issues you'll have. Ask anybody who has, let's say it's July, the 3rd of the month is Sunday, the 4th is on Monday, and they get paid that 1st on that Friday. But we can't draft until after the holiday on Tuesday on the 5th. Now, if we actually, I think we had that happen this year or last year, when that happens, there's a much higher percentage of people who lapse because all that time passed between then and now when the money's taken out, when it's just not there and they forgot, and so on and so forth. Whereas the Social Security billing companies that allow for this option, they would have taken it out that Friday. And so that way you take the money when it's there before the client can take it from you and cause all these lapse issues to begin with. Lots of companies do it now. Unfortunately, too few do. A lot more need to be doing it. It's an easy task to implement. Makes a marked difference in persistency and quality of business. Off the top of my head, Transamerica does it. Trinity and Family Benefit do as well. I know Prosperity Life does it. I think American Amicable does it. And Security National does it as well. Although they weren't doing it, but I've heard that they do implement it effectively now. So those are good companies to use, and you can do it for any kind of form of billing, whether it's a bank account, savings, or Direct Express or card or something like that. Okay, 1 second, guys. Excuse me again. Moving on here. So what happens when you see a missed payment? Of course, look, you can do all this stuff that I'm instructing you to do, and you should. You're still going to get lapses. You're still going to get people who call to cancel. So you need to know how to handle this stuff and what you can do in order to prevent as many lapses as possible. So this is the question here is specifically about what happens when you see a missed draft. Okay, the draft's supposed to go through, you get an email from the company, or you get a letter or some kind of notification. We tried taking money from client A, it wasn't there, please contact them. So I would say, and this is based on personal experience of ignoring doing anything at all, and I'll tell that story in a minute. I would say about half of the lapses that you get are out of just shrewd ignorance. The client just doesn't realize that there was a payment that was supposed to come out. They instinctively taken out their money on the 3rd when they get the check, and they forgot to leave the $50 behind for the insurance. And the thing is these people won't contact you 95% of the time. Literally, 95 out of 100 times, you'll never hear from them if they get a lapse. They'll get their letters, but they won't respond to it. They get angry, they get mad. Who knows? It's confusing. But the point is that 95% won't contact you on the lapse, but that means that you have to. So, and literally half the people you're going to contact where you get this missed payment, it's because it was ignorance. And if you just call them up to double up the payment for the next month, or maybe you'll have to rewrite the plan, you'll save that client and keep them on your book of business just by doing that. I mean, literally, so many problems are caused from that. And if you just do this, it makes a huge difference. Continuing here, and yeah, you may have to go back and see these people. That's kind of one of the things that if you can't get it set up off the phone, although I have pretty good success, I actually have an assistant that does the follow-up with missed payments, and she's pretty good about following up with these people. It makes a huge difference. But you may have to go back and see these people face-to-face, but that's just part of the deal. And lastly here, there's going to be some that cancel, okay? And if you contact them, what you'll find is a lot of the times the people will just give a vanilla excuse. It won't sound legit. They'll say something like, I can't afford it anymore. Like, well, what if we get you half the amount of coverage? I can't afford it anymore. Many times I have found that is an indication that you were just replaced. And it's very hard to work with somebody over the phone to get them to tell them the truth. So some people advocate, which I do up to a certain extent, to show up at the door and have them write out a cancellation form and attempt to try to save the sale face-to-face. The only issue is if you do this is that if you cover a wide swath of area, it becomes logistically difficult in order to actually implement, where you're trying to see one person who's 2 hours away from the other and trying to fit that save in. It may or may not make sense. And at the end of the day, you'll probably have to lean on the phone sale as much as possible in order to save it. So, but contact these people. That goes back to that point altogether. You're going to get some people who say, yeah, I saw this cheap insurance plan through AARP. Oh, really? Yeah. And it's much cheaper, so it's term insurance. Well, now you've got a potential to save this if you re-educate the client on what the options are and why that's a bad deal. So you may have some options when it comes to that. And but most of the time, when it comes down to retention, it really does start with the beginning of the sale, how you sell. Make sure you sell on affordability and need, not on desire and vanity. You just don't want to sell that way. You got 9 months to clear your chargeback potential, so you got to make sure what you sell sticks and is easily affordable. And people we deal with are on a fixed income after all, so you have to respect that and realize that's how they think too. Sell the competitive premiums, sell Social Security billing as much as you can, as much as possible, and call these people when the lapses happen. Don't be afraid. Oh, that's the one last thing I was going to add here. When I first started in the business, my first winter, I ran out of leads, and but I had all that time. I'd had a few cancellations, people calling up cancel or more specifically missed payments. And my thoughts were originally, I thought, these people are stupid. If they're going to buy something, get letters from the company saying, hey, you can save your policy, contact us to rearrange payments, and they never do. And I thought, these people are stupid. They're not going to keep the policies anyway, so why should I even have any effort to go after them? Well, when I had no leads this December, this was like 2011, I went out and saw all these people who lapsed on me, and I literally saved half of them. And even half of the ones, the other half, I would have saved more if I had actually didn't have my head up my ass and went after these people right when the lapses occurred. I had literally people say, "Oh, I thought I was declined. I thought they wouldn't accept me." I thought, you're silly. You took the plan out and they approved you. Why are you acting as if this wasn't done? But that's just what these people think. And so, my point being is that there's just this business is different. Final expense is a lot different from other lines of insurance. Being successful in final expense is not a matter of necessarily understanding the carriers as much as it is understanding the people in the market that we deal with. Again, this is for those of you who do direct mail leads, probably Facebook leads too. There's a particular understanding you have to gain from working with these people. They're not going to call up and reset payments. They're not going to, bug you for anything. They'll just not carry it if it ends up lapsing, and it's vexing, and it will drive you nuts until you just accept that these people are different. And you have to do things like what I'm describing. Go see these people, call them up, get them set back up on repayments, because that's just the only way really is that makes this stuff viable and gives you the best way for the best persistency. I got a couple questions here from Chris. Hey Chris, how you doing? Chris says, why won't the insurance carrier simply call them? Because it's just not their job. I don't know. I don't really have a good answer for you. Some do. I can tell you Security National has an inside office that makes phone calls, that helps reestablish payments, but I can't verify that it actually is something that I think makes a measurable difference. Some larger agencies have an internal office that calls on lapsed payments, and it's just very difficult. The thing that you have to realize is, most of the stuff that you would probably wonder why they don't do it, they probably did in the past. But when you look at all the carriers out there and you realize that very few of them actually do any of this stuff, when you would think it would be obviously of a benefit, my point is if nobody's doing it, it's very likely they've already tried it, and it's just been a net loss and hasn't been any sort of gain towards the carrier. As silly as you think it is, but that's, again, indicative of final expense sales. A lot of people don't understand why that wouldn't make a difference, but it does. And then you continue and say, or was that the agent's exclusive job? It is their job. It's their book of business, the way the insurance carriers look at it. And their job is to keep that book of business on the books. So at the end of the day, it is your job because nobody else is going to do it. And you have to follow up with these people. And go see them. Go sell them. And go keep them. Because that's what really matters at the end of the day. So other than that, guys, I'm going to give my lungs a break here. I hope you enjoyed the live stream. If you have any questions at all about retention strategies not covered, or if you'd like for me to clarify anything, you're welcome to leave a comment below. If you've got a retention tactic that works really well, tell us about it in the comments box below. If I can do anything for you, you know what to do. Go to feagentmentor.com, click the contact button, send me a message. I'll be happy to answer any questions, concerns you have about how things work or how the mentorship program works. Other than that, I will probably see you guys tomorrow. Y'all take care. See ya.